Hey guys, we're back on again with Ask Elena and with our guest, repeated guest, Michael Aguilar. And Michael is on his third video out of 5 video series that he's going to do for our channel, at least for this month. So I'm hoping for more. And today's topic is something that you should all be super aware of when you first start the journey toward purchasing your home. And that is understanding appraisal gap strategies. Now, most realtors and most lenders do not talk to you about the concept of appraisal gap. And they don't do it for a reason, because they don't want you to become too worried about it at the beginning of your process or at the beginning of your journey. But I take a different approach. I think that making sure that you understand everything that is involved in a process of purchasing a house is very important, because if you start the process right, you're more likely to finish the process right. So with that said, let me just very quickly introduce Michael. So Michael, introduce yourself if you would.
Good morning, everyone. My name is Michael Aguilar. I'm a loan officer with Supreme Lending. So thank you so much for joining us today. Supreme Lending is a mortgage company that's based out here in Dallas. We started back in the early 2000s and have been helping home buyers make the loan process as easy as possible and helping the dream come true.
And actually, I can say that from my personal experience, they have a larger selection of loan products than most lenders whom I encounter. So I strongly encourage you, if you're watching this video, give Michael a yell if you're thinking about buying or selling, even selling a loan and selling a house and buying a house, because you might be surprised what you don't know until you ask about what options you have available for a loan. Now, very quickly about me. Probably you encountered me on Facebook. If not, I do have a Facebook account called elena.getit.kwc. And that is where I aggregate a lot of information about personal finance, credit repair, down payment assistance. Again, topics like today, very interesting topics about appraisal gaps, pretty much anything needed for you to be an educated consumer when you're trying to purchase or sell a home. On top of that, if you are on Facebook, find me on one of my groups. One of them is called Rent to Own DFW. Another one is called New Construction Homes DFW. Homes with pools, homes with acreage. I specialize in certain topics. So if you're into those topics, I might be a very good resource for you to ask questions. I do perform a lot of webinars. Almost every weekend, you will see 3 to 4 to 5 webinars that are usually centered around loan financing, sometimes non-conventional financing. But a lot of it also has to do with your mindset, your wealth building habits, your money building habits, and also smart financial shortcuts that you can sometimes use to get yourself closer to a financial goal. I have a meetup. So if you're on Meetup, find me on meetup.com. My group is called Personal Finance and Real Estate Advice for DFW Families. After we finish this recording, you're going to be able to find this recording online on YouTube. And if you don't know how to find me on YouTube, just type in Ask Elena about real estate and my channel should pop up. You will see this face right here, and this is going to be my logo. Without further ado, Michael, would you like to go ahead and share your screen?
Yes, ma'am. Absolutely. Alrighty.
See if you can share. You should be able to.
So it looks like we're sharing. Is it looking good over there on your end, Elena?
Looking perfect. Please take it away.
Awesome. So today, guys, we'll be talking about a little bit how appraisals and appraisal gaps can really affect your dream house and your dream of purchasing a home and being a homeowner. So really appreciate your time today. So going on to the first slide, I really wanted to kind of dig in and talk about the goals of purchasing a home. And Elena, I'm sure you're familiar. This is one of the biggest conversations that we have up front with buyers. So wanted to kind of keep it very simple and straightforward. I mean, the goal of being a homeowner is finding your dream house, buying your dream house, having an investment that you own, right, that you love. And that's really kind of where we're all on the same page of buying that dream house. And I think, in doing that, part of that goal is being comfortable, spending a comfortable amount of money, at the closing table, they have a term called house broke. You want to make sure that you have enough savings, and even after that, after you close on your home, having month to month, life happens where you want to be able to, be comfortable on the out-of-pocket expenses every month for your mortgage payment. Living in the right county, right? Having taxes, being reduced, and having an affordable amount of mortgage payment can be really, really important in goals of buying a house. But now sometimes with those goals, things happen with the lending side of things. A lot of first-time home buyers, 99% of first-time home buyers will use a mortgage loan to buy a house. And there's different perspectives on the way that you look at a house and the way that the lender looks at the house. And there can be threats. So really kind of digging into the first one, if the lender does not view your house, the way you do, that dream that you have can be threatened. So it's important to really understand, the way that the finances work when buying a house, the different terms of an appraisal, right? And what that means for your dream. And really, this video is going to be focused on how an appraisal gap can really affect that dream, and how there's certain strategies from lenders like myself who can prepare you for when things like that happen. And just making sure, Elena, does that all make sense? Having just kind of the dream threatened, and really, most lenders not really having solutions for these type of appraisal situations.
I must say that you're the very first lender who ever talked to me about appraisal gap strategies. In most cases, when we do have an appraisal gap, and trust me, I have solved many of appraisal gaps all by myself without ever asking a lender for help, because I didn't think that they would be involved. You're the only lender whom I ever encountered who reached out to me and said, I have strategies for it. So yes, I must say the lender definitely doesn't view your house the same way as you do. And when a lender encounters a stumble like appraisal gap, you don't know yet what it means. Maybe what we're about to go over it, it's a little bit of an issue that can sometimes pop up when you're trying to buy a house. Most lenders just basically tell you to renegotiate the price. And that's most of the help that I usually get from everybody.
Right. And
So
even
yeah,
having that recommendation, it can be tough even getting that information out.
Exactly. So I'm actually this first time that I'm watching this video, and I'm extremely curious what solutions you have, because you're the first lender who's talking to me about it.
Perfect. Well, I appreciate it. Well, kind of getting into the different perspectives of how an appraisal comes into play. Whenever you're looking for that house, you're a first time buyer, and you have certain desires, certain wants in your house. Some of the things that you're viewing is the amount of bedrooms. You have a family that you're trying to provide a roof for, and provide a safe space for. So you want to have enough bedrooms, maybe even for the dog, right? I have a big old Great Dane at home. He has his own room, right? So I mean, that's important whenever you're looking for a house. Backyard space, you want to make sure that come around football season, come around time of entertaining guests, you want to make sure you have enough space in the backyard, right? These are the kind of different things that you look for. The kitchen layout, you want to make sure that you have the most beautiful kitchen that satisfies you, right? You want to make sure that you can really have a home you're proud of. These are the type of perspectives that you view whenever you're looking for that dream house. Well, the lender does not care about any of that. And it's kind of sad to say, but it's important to know how they will view the house that you want to buy. So the first thing that they'll look at is the appraised value of the property, right? That's the amount of money that they're loaning on. They want to make sure it's a safe loan. It's not a risky loan, right? So in that, there's a specific term called the loan to value, right? How much are they loaning versus the value on that house, right? Very specific loan terminology. The second thing that they're looking at is things like cash to close, right? Down payment, right? How much of an investment, how much skin in the game are you having up front versus how much they are providing? What are the closing costs that we're gonna be charging you? Are you gonna be buying down your interest rate? Do you understand how much that is gonna cost you? Right? There's certain terms that are gonna go in this. And lastly, if you watched our second video out of the series, we kind of got into mortgage insurance. And so a lot of loans do require mortgage insurance, for the loans that will be funding to you. So
And
these
just
are the
kind of piggyback on that, guys, I'm going to put a link to, so if you're watching this video, please, please, please make sure to watch a video that I'm going to link in a description about mortgage insurance, because not to kind of restate what already been said in another video, but almost all of the items that he's talking about right now, even though right now they look like words on the screen, in reality, it is thousands of dollars out of your wallet.
Right. Absolutely. And I appreciate you mentioning that, Elena, because it can really, really put some stress on your pocket if you don't understand how this works. So we're just trying to educate you as a consumer and make sure you can make that dream a reality. So that was a lot of terms to really kind of digest. Really just kind of wanted to, ask you, Elena, make sure that the viewer kind of just understands, that there is two different perspectives.
I think that starting off their journey to home ownership, most first-time home buyers are almost unable to view the house from somebody else's eyes. And it takes a lot of education on my part to make them realize that more than countertops and backsplashes, there are also numbers behind the house. So this video is extremely important because it takes me hours and hours and hours of explanation sometimes to drive the point home that you should be looking through every house from a standpoint of a lender, regardless of how much you love the house. So yes, I think that so far I am fully ready to listen to your strategies. I'm tingling with anticipation.
Awesome. Sounds great, Elena. But I mean, I think it really, truly kind of piggybacking on what you said, it comes down to having the right people working for you. There's so many different professionals in this market, but it comes down to trust, and really following through, from a lender's perspective and from an agent.
And I just want to actually interrupt you on that. Sometimes people come to me as I'm their third or fourth realtor, and they already been under contract 2-3 times, and they fell out of the contract every time.
Wow.
And when I started to talk to them about the appraisal gap, they said that they don't know anything about it. When I started to talk to them about closing costs, buying down interest, they've never heard those terms. And I said, whom did you work before? Like, how did you get under contract 3 times? So yeah, working with the right people who are willing to give you education, especially if you're a first-time home buyer, I cannot overstate the importance of it, because I have had people who've been fell out of the contract twice and lost, up to $5K on each time they fell out of the contract.
Wow. Yeah. And just something to note is every buyer I work with, every loan applicant that I work with, we have these conversations. We have these conversations about appraisals, about closing costs, about cash to close, all these lender terms that are really stressed on the front end. So the word appraisal, right? What does this word mean? This word can absolutely win you the deal with so much clarity on your investment, and it can kill a dream on the flip end, and has so much power. And I think that can really, really kind of emphasize why we're taking time to talk to you today about this. So why an appraisal? Why does this even exist? So an appraisal is the value of the house that is requested by your lender, right? The bank. They want to make sure that the house that, although you have agreed to buy with the seller, they want to make sure it's a safe investment on their end, right? At the end of the day, they will be providing you money to make this dream come true. So appraisers, they actually conduct a room-to-room walkthrough to determine how much the house is worth. So you will have someone going in to essentially inspect this house, right, from the bank's perspective. Now, what the appraisers do whenever they have walkthrough and they're making their determination um, on what they're seeing, is they're going to compare different home sales in that same neighborhood. They're going to look for different houses with the same amount of bedrooms, the same amount of bathrooms, similar amount of square footage, right? How big was the backyard? What is the lot size on this, right? Kind of similar to what you're looking at whenever you're looking at the home. They will look at this too. Remember, they're working for the bank. So it's really important to understand that they will determine this market value on your home whenever you are buying this property. At the end of the day, guys, an appraisal really plays out like this. Sellers can accept lower offers in your neighborhood. That's something that you have no power on. And ultimately, that affects you because that will lower the value of the other homes in that same neighborhood, right? So if they're accepting lower offers, it's important to have an agent really make sure you understand that, right? Really make sure you're in the loop with that information. So now that we understand, what an appraisal is, why an appraisal even exists, we get into an appraisal gap, right? There's a gap for the appraisal and the amount of house you want to buy, right? So I just kind of want to walk you through this with a visual representation. So you're a pre-approved buyer, right? You just got a pre-approval from your lender. Now you're working with your agent to find that dream house of yours. So after doing a lot of shopping and going to different neighborhoods, going to different open houses, right? You found the one. You found your dream house that you also love, right? So you put in an offer. And you talk with your agent about what's the appropriate price that I should pay for this property, right? You talk with your lender to make sure how much I want to put down. What's my initial investment on this property? You have these conversations while putting in your offer, and then it's sent to the selling party, right? And then the offer is then agreed upon by the seller. You guys now have an official executed contract, right? It's an official document. That is some of the most encouraging words you can have, right? For yourself and for both parties. The sellers want to sell their home just as much as you want to buy it. So what's next is that the bank is going to do a appraisal, right? They're going to do their inspection. They want to do their due diligence on this house, right? They pre-approved you. Now they want to make sure that they're following through on this house that you are buying. So what happens is you have a document that you receive, and this document is that appraisal. Well, the appraisal comes back at a lower amount than you actually thought for the value of the house. The realtor told you the house was worth X amount. The sellers, were confident that the house was going to have this value that you're going to buy it at, but the bank doesn't view it that way, right? So what does that lead to? That leads to a contract that is no longer and can give you an opportunity for an out on this process, right? But this is your dream house. This is the house that out of 25 houses that you found, you want this one. So what do you do, right? With banks like Bank of America, Rocket Mortgage, Capital One, all these big bank lenders will not give you a solution. They're going to say it is what it is, and you're going to have to figure out what to do with this lower valued home, right? Because they're not going to give you.
Can I interrupt you for a second?
Absolutely.
So let's just say, very hypothetically, they bid 400 and the appraisal came in at 389. So why is it all suddenly falling apart? What is that? It's just a paper, right?
Right. So great question, Elena. Whenever you go through that pre-approval process, that conversation with the lender, you talk about how much money you want to put down, how much money you have saved. What's that comfortable amount, right? That's a big part of your goal. Well, when a house is not worth as much as you thought, you still have a legal document and a promise to pay to the sellers. right? There's some sort of fulfillment and some sort of way that you have to come up with that additional money as you promised to these sellers by that document. It was signed by you, and it was signed by them for that promised sales price. So what does that cause? That causes both parties to be in a very unhappy situation, very sad situation, because both people know it's difficult. It's difficult to overcome this.
But no, it's still not clear to me. So let's just say it appraised for 389. So it's just $11,000. Like, can't we roll into the loan?
So no, the lender will only loan and will only lend on how much the house is worth based on that appraisal. So although that the sales contract, right, that offer that you put out that was agreed upon was 400,000, well, your appraised value came back at 389. So you are going to have to come up with an additional $11,000 to come fulfill that promise, to fulfill that
on
agreement.
top of the down payment.
That is on top of your down payment and your closing costs. And that doesn't go to the bank. That doesn't go on top of your investment. That it goes directly to the sellers.
So if my appraisal value is $11,000 less, but my promise to pay is 400,000, then technically I cannot meet my contract obligations.
You cannot meet your contract obligations. And if you have
at least not with the pre-qualification letter that I got.
That's right. And if you and your agent have given you the entitlement to have what's called the appraisal rights, then you can back out of that contract, right? If that $11,000 difference is something that's just non-negotiable, you cannot do, you can absolutely back it out of that contract. But if you wanted to make your offer stronger in a multiple offer situation, and you waive those appraisal rights, you know, you're really putting your situation to lose thousands and thousands of dollars in an earnest money deposit, and paying for this appraisal cost, where you
Not to
can
mention
really be stuck in a
inspections
situation.
and surveys. Sometimes we already have
Exactly.
a survey and an inspection and an option fee and earnest money. Everything is just like one big thing crashing down.
Furniture, everything. You're so right. And what are some of the consequences, right? How does this appraisal gap affect that dream that we're talking about? So the first thing is, you know, really kind of asking yourself and really asking, talking to the agent, how does this affect me? What does this truly mean, right? Well, you know, you received that letter from your lender, and that lender promised, or that lender pre-approved you, right? You had so much trust in them, but at the end of the day, when they did their due diligence on the house, it wasn't worth what you thought. You've made moving arrangements. You know, you've already purchased furniture. You've went to Lowe's, right? You know, you
You
got that
already
brand new
canceled your
refrigerator.
lease and now you cannot get back in.
Exactly. You've made so much commitment to both feed into this ocean, both feed into this decision. Well, what's next, right? What's next after this appraisal comes back low? Well, not having a strategy can absolutely kill that dream. Not having a strategy, not having a solution can allow you to lose that deposit, right? To lose that earnest money that your realtor, that your lender is telling you you will get back if you close. But this document prevents that, right? And if you don't, you know, win on this house, you're losing those inspection fees. That inspector is going to inspect that house. You're still going to pay them, and you're not getting that money back. You paid for that appraisal. Now that appraisal didn't come back the way you thought, right? Your lender's telling you that house is not worth what you thought. That's fees out of pocket that you're losing. And ultimately, after all of these consequences, and you see kind of the dominoes falling, you know, that can be so discouraging on your dream, so discouraging on the goal of what it was to buy the house. And like I said, a lot of the big banks, Bank of America, Rocket Mortgage, the ones that you see on TV, you know, they have this great product, but when it comes down to a very sticky situation as such, they do not and will not give you a solution, right? They're going to move on to the next customer, right? It's too much time invested into this, so you're going to pretty much be stuck in the middle of the ocean with no help and no support. That's why it's so important to really work with the right lender that gives you a solution. And I am that lender. That is a conversation that we will have at the point of me handing that pre-approval letter to you. It holds so much power, but also can affect your life in so many ways. So really making sure to work with the right person and to really work with the right team can really make or break this dream. Now, go ahead, Elena.
Before you say that, I'm actually working right now with a couple, and they mentioned to me that they're hesitant to get back in again because they got burned so badly last time. And I said, so what happened last time? So apparently 2 years ago, they were shopping for a home. They went under a contract, and there was an appraisal gap. And apparently they had like over $1,000 in option fee, almost $6,000 in earnest money, and of course all the other things. So they got burned so bad. But on top of that, the emotional was much more worse than financial, because they were so in love with that house. So when the appraisal gap came in and they couldn't close it, they at that time could not even fathom going back to searching. They didn't even have the money, because that part of that money that they lost was part of their down payment that they planned for. And they spent 2 years renting. And after 2 years, the prices went up significantly. So their income didn't go up, but the prices went up. So now they're looking at a much smaller home with fewer amenities. And they're now trying to get the courage to start buying again. But now they're asking me, how can we avoid the situation? So this is what I'm sending them tonight.
Great stuff, Lena. And I'm so sorry to hear about that couple that you're working with. That is definitely can really be depleting. But working with the right people can bring that motivation back, can really show you on the front end what solutions we can provide. So the first effective strategy that we can do, and ultimately in the market that we are in today, the buyer is gaining more power. And that's why this is the most effective strategy to date that you can do. And that first is renegotiating the sales price. Yes, although you have that sales agreement with the seller, your agent has the power to talk to the seller's agent and tell them, hey, this appraisal did not come back. The value of the home did not come back where we thought it was, did not come back where you thought it was. We'd like to, we still want to proceed on this house, but we'd like to renegotiate and get back to the drawing boards on the numbers, right? That $400,000 house that we had agreed to pay, we'd like to bring that down to $389,000. Your house is only worth $389,000. We don't have enough money to give more. There's not a lot of cushion, so we're gonna have to renegotiate. It's the first strategy to help in an appraisal gap. Second strategy is, and with these solutions with the asterisk, these are specifically for conventional loans, right? So if you're with an FHA loan, a VA loan, a USDA loan, those government loans, you're given less power. You're given less power. So with the conventional loan, you can bring a smaller down payment, right? If you thought you were bringing 20% as your initial investment on this house, well, maybe you can bring down that smaller payment to finance a little bit more. Although there'll be some repercussions, it's a still solid way to still win on the deal, right? Although you didn't have that strong investment that you originally thought, you're still moving in, you're still packing in that house, that furniture will be delivered, right? The next strategy that I talk with buyers about, again, this is for conventional loans only, is split mortgage insurance. So mortgage insurance can be looked at in a couple ways. One is on a monthly basis. The other is upfront. Well, there's a product for mortgage insurance to help pay half of it upfront to include in your closing costs. And then the other half of it, you can just pay monthly, right? And with a conventional loan, this gives you the power to have flexibility, with this mortgage insurance. And then the last one, the fourth one out of 5. This fourth one can be the second heaviest on your pocket. and it's bringing all of the mortgage insurance up front. This allows you to keep your monthly payment very similar to what you were thinking, but that investment that you thought you were making will not go towards the equity. That's going to go towards closing costs, right? So you will own less of the house by using this strategy. You know, although you're winning the deal, it's important to focus on what you're losing on, right? What's the opportunity that you're missing out on? And that's kind of what's going on here. And then the last one is the solution that a lot of people really encounter. And really a lot of lenders will tell you, you know, where you either renegotiate or you bring the difference, right? Everything in between is not an option. A lot of lenders don't have these conversations to bring up flexibility to manipulate mortgage insurance or find strategies with mortgage insurance to help, right? So what bringing the difference is, you know, you have a $400,000 house. The seller will not budge, right? They want to sell that house for $400,000. So you have to come up with that $11,000 on top of that down payment, on top of the closing costs. So it's $11,000 you're going to have to ask, pull out of your 401k that you may not want to have touched, you know, ask for a gift, you know, from family, and can really put a lot of stress when asking for more money, when there are effective solutions in between from your money that can make and help you see through the finish line. So does that make sense, Elena, about these strategies on how they can help?
To be honest, I've never heard of split mortgage insurance before, even though I had millions of conversations about gap appraisal strategies with lenders.
So happy to hear that.
Never heard about upfront mortgage insurance. It just, I would like to personally after this to kind of pick your brain a little bit more about that. This is
Absolutely.
a very, very powerful, like very powerful solutions.
Yeah, thank you. I appreciate you mentioning that. And for anybody that's viewing this video and watching this video, if you're stuck in a situation right now and your lender doesn't have any solutions, you have my contact information. Email me, call me, and we can go through this together. And I can show you what it looks like on solutions to save that deal, to meet that closing date that you promised to have. There are solutions. At the end of the day, guys, it's really making a smart offer. And when making a smart offer, those conversations with your real estate agent are very key. You know, at the point of the front end process, I'm pre-approving you. I'm looking at your income. I'm looking at how much money you have saved. I'm looking at your credit, right? I'm taking a peek behind the curtain on your finances. But at that point, your agent plays so much importance whenever negotiating, and they have access to so many tools that can help you prevent the situation from happening. So what's the first thing that you should do about making a smart offer is talk with your agent about the sales in that specific neighborhood of your dream house. What are some of the houses that we can compare it to? What are some of the houses that have sold in the past that are just like the one that I'm about to buy, right? What do those look like? What did they sell for, right? Your agent can have these conversations with you to help. Now, home sellers can really list their property. They can sell their property and sell their property for however amount they would want to. If it's a $200,000 home, they can sell it for $1 million, right? If they want to, they have a buyer for it. There's nothing restricting that from happening. So really understanding that point can help you negotiate what a fair price is based on your research and the agent's research, right? There's, like I said, there's so many tools to find recent sales in that house, in that neighborhood for that dream house. So what to do when making a smart offer? First thing you do is call Elena, right? Elena is a very tenured real estate agent who is an expert negotiator, right? She has access to tools with the powerhouse brokerage of Keller Williams that can help you really analyze and strategically negotiate on a sales price, right? That's really the first thing you do. So if you don't have access to internet, you don't have access to anything, internet, website, you know, that kind of just scares you off, give her a phone call, right? You shoot her a text. She's very responsive, and you see her number there. The second one is you can always email her, right? If you have a current offer, you have a current contract, that situation that you're in, ask her, right? She would be more willing to help, and offer her services to help you, right? She can help provide solutions to get you out of that situation, right? Maybe you coach that agent. Maybe that agent's very new, as a family member, right? A friend, a sibling, right? Somebody that you wanted to work with but didn't really have enough experience. Well, she does. And the last thing you can do is you can look at her website, and you can really educate yourself on videos that she has posted and invested so much time in helping you guys, right? Helping the consumer. That's what making a smart offer is. It is coaching you, coaching the buyer.
I think that the process of purchasing real estate is so much more complex than any other process that most of the buyers encounter. Proper education before they start the process and before they go under a contract could be the key between success and failure. Now, I did want to mention that. Thank you so much for the plugin. If you're already working with a real estate agent, or if you're considering working with a real estate agent, when you're talking to them about potentially using them for the purchase, ask them a simple question. They said, how many courses on appraisal have you taken as part of your education? Because I made sure that I took 2 separate educational courses on appraisal, so I could understand everything when I get an appraisal report, that I would be on the same page as an appraiser, so I could argue as an appraiser. By the way, there is one more thing that you didn't mention. I can bring my own comps, and I can even sometimes, if the listing agent is completely incompetent, and I can tell, I feed the comps to the listing agent, so the listing agent would have the power to potentially bring additional comps to the appraisal attention. But if you're thinking about working with an agent, just ask them, how many hours outside of your initial licensing have you taken on appraisal? And if they say, I've never heard of such thing, just take my advice and just try to find a realtor who is paying attention to those items.
Right. That hashtag that you have, Elena, is more than just a marketing strategy. It's a powerful question, and it's Ask Elena. Ask Elena, right? She'll put you in touch with the right people, and she'll get you in the right direction. At the end of it, thank you so much, guys, for taking your time to learn about appraisals, and really, hopefully, you're watching this before you apply for a home, before you apply for a mortgage.
Please watch it before you apply for a mortgage, because sometimes by the time you're in the middle of a contract, asking somebody to help you is sometimes already too late.
Can be very, very unrealistic, guys. But this can really save you thousands of dollars that you've saved in your pocket, and most importantly, the emotional commitment. That is what it can save. It can save you a lot of time and stress.
Michael, before you run, I have 2 questions that I get asked a lot, and I wanted you to answer them. Number 1, can I pick my own appraiser?
No. So ever since 2008, there have been a lot of restrictions, a lot of guidelines, right? That was such a difficult time for America, such a difficult time on our economy, where they have put in place a lot of rules. In this case, realtors cannot communicate with appraisers. Lenders cannot communicate with appraisers. We communicate with their managers. We communicate with who assigns them these different properties to inspect. So the short answer to your question is no. You cannot, the consumer, speak with or communicate with the appraiser.
And the second question is the inspector perform the appraisal?
I think that's the golden question here, right? What's the difference between an inspection and an appraisal, right? You had said it was an inspection for the bank. Well, an appraisal.
You see, there is 2 different inspections, and that's where the terminology gets confusing.
Right. And so would you mind asking the question one more time? That way I'm clear on my answer.
So when we're hiring an inspector, very often they're asking, is he going to be the same person who performs an appraisal? And can the appraiser see my inspector report?
So it's 2 different people. You have an appraiser and you have an inspector. If you have a lender who is not cautious, that inspection report, yes, can be sent to an appraiser, and yes, can affect the result on that value. So it's very important to really work with that right person, because I do not. That is very foul to kind of send that information on a very critical timeline for this such a big transaction, right? That is information that the appraiser should not know, doesn't need to know. They can do their own research, right? Let them do their research based off the comparisons that the agent made. The inspection, that's for you. That's for you to have.
Now, question to you: the VA report, your in VA loans, the VA appraiser gets to see the inspection report?
So short answer is no.
Okay, good.
But short answer is
Good, good.
yes. Short answer is no. But anytime, if you're a veteran watching this video, it is required to send that inspection report to your underwriter from your
And
lender.
termites. Don't forget termites. Please do termite
Correct.
report.
Right. There's a couple supplemental documents as an inspection, termite inspection, that need to be that are part of your approval. They're a part of that last process for your loan to get approved. That's not the case with FHA. It's not the case with conventional other loan products. But if you're a veteran, those do apply. So make sure you have these conversations with your agent and your lender.
Gotcha. I have no further questions. I think that if anything, now I need to follow up and get more clarification on some of the strategies that you provided, because the more I know, the more I can help my buyers in a critical situation, maybe 12 o'clock in the morning when they're crying and I don't have anybody to call.
Absolutely. Well, yes, man. Thank you for having me, Elena. I really appreciate it. Hope y'all enjoy your weekend. And thank you so much for watching.
Thank you so much, Michael. Guys, if you, number one, I'm going to take his contact information and put it in the description of this video. So if you are just at the beginning of your journey and you're still considering how to apply, when to apply, etc., always start by checking with the lender and running by them your move out date on your end, all of that good stuff. So call Michael today, even maybe before you think that you're ready to do that, because sometimes by the time you think you're ready, it's already a little too late in the process to start doing research. So call Michael today, tell him what kind of, if you're a first-time home buyer, if you're a veteran, if you have anything else that potentially could help him to identify the best loan structure for you, but also mention how much down payment you're planning to bring, and let him help you to choose the right loan product for you. That's it for now. You guys enjoy your day, and we'll see you at the next video.